some pretty bearish developments across the crypto segment, especially in Bitcoin and Ethereum. We're not looking as bad right now in Bitcoin Cash. We've had another pullback. If you recall, we did have a sharp pullback in early December 3rd to be exact, in which we hit lower lows. We invalidated our bigger upside purple primary pattern. And ever since then, we had some bullish action. We rallied up and we start pulling back what appeared to be in corrective form. Bitcoin and Ethereum have not shared the same fate. They've actually had lower lows. They've broken lower. So we do have a 5-wave impulse to the downside, which we'll take a look at momentarily. Bitcoin Cash, however, we're not seeing action that's looking as bearish. It's not as pessimistic looking. We don't have a lower low yet. When we count this thing, our green pattern, as last time, is our primary, and it hasn't invalidated yet. But I have added this red pattern here, which is calling for a bit more downside. And when we review it, again, we had our lower low that we had a low that hit on December 3rd, right around $350. And we're getting close to that range. We're about 375 right now as of January 9th. And not sure if we're down complete yet or not. Looks like the MACD is crossing over. So we may be getting close to a local bottom. If we hold, our green pattern would still be primary because, again, we have our top that hit in early September. And this would make for a very clear ABC correction. This impulsive structure to this wave is fitting with what a C wave should look like. So this could just be a slightly nominally lower low for Bitcoin Cash. And then we may be off to the races after that. The same would apply in Ethereum Classic and EOS, Filecoin. However, one must have an alternate pattern. I know we don't like doing that. You know, why do you keep changing the charts as you keep going? But this is what Elliott waves are all about. You must change your outlook. You have to change your mind when the facts change. Since we have been breaking key supports in all the cryptos, we got to be cognizant of the idea that we may not be right with our green pattern. Our green pattern may break. Remember, the green pattern doesn't mean that it's going to happen. We don't know for sure. It's the most likely pattern until it breaks. So right now we're getting very close. I may put this red pattern at maybe a 50-50 probability right now. It's gaining in likelihood as we drop lower and lower. I would expect this thing to go a little lower. That would be 5 down in our red impulsive wave 1. And then we'd expect a bounce up in corrective manner. So in other words, we'd have an ABC bounce back up. And usually when you have a big crash coming, your bounce can often be very strong. It's kind of like a fake out rally. You could get called out a bull trap, anything like that. If that is the case, that'll be a very clear indication that we may have some downside ahead. I've marked that as the gentleman's exit. I keep harping on that. It's not a time to panic sell right now. We need to see this thing go down to probably about 305 to 261. That is where our impulse should extend based on the internal Fibonacci sequence, the 1, 2, 3, 4, 5. And then we would expect to see a bounce back up. If we do break that directly, I'm not really sure how much lower we'll go. The linear chart makes it a little tricky. We could go into the low $100 range based on this, but it gets a bit more clear on the log chart. Shifting to the big picture view in Bitcoin, as I mentioned earlier, it looks far more ominous. So while in Bitcoin Cash, we had a pullback in which we had what we're calling an X wave, and then the second bounce didn't go as high. In Bitcoin, we actually had an A wave, a B wave, and a C wave. That's the red pattern. Again, it's not primary yet. It's looking more and more likely. This looks like a very textbook ABC correction though, or a fake out. And it would be very fitting as part of a larger wave 4 flat correction, an expanded flat to be exact, because our B wave went higher than our previous third wave peak, which happened in April of 2021, ahead of pretty much all the other cryptocurrencies. In this picture, I do have this showing that we have hit our target in Bitcoin. So we do have a clear 5 down. We hit the standard 1.764 target for Bitcoin, and we should start seeing over the next few days to weeks a corrective bounce up if the red pattern holds. Now, if we do have an impulsive rally right up through that support, then the red pattern is effectively dead, but we're not there. We've got to see what happens. So enough with Bitcoin. This is why things look very ominous. We have a similar setup in Ethereum as well. Bitcoin Cash, we don't see the same thing. So as I mentioned, we had our first rally and then a pullback, but then our second rally didn't go up as high. It looks very much like a corrective wave. It could be a B wave. It could have been a B wave. Now that we've had a lower low, almost certainly not a B wave. I'm counting this a bit differently from our close-up picture. In this picture, I started our first wave from this peak on November 9th. And then I'm saying that this whole thing is an impulse down. In this logarithmic picture, it actually fits better if we look at this initial peak on September 6th as the beginning of our first wave down. You could count 1, 2, 3, 4, 5, maybe a leading diagonal. This looks like a very textbook corrective bounce up. This is our second wave up. And then our big spike down on December 3rd would fit the proportions for a third wave down. It does look like a diagonal, if nothing else. So I have these blue dotted lines drawn here in standard diagonal format. So this could be an ending diagonal, could be a leading diagonal. I'm counting this as a leading diagonal, which is of course always going to be the form of an A wave or a wave one. It's your first wave, leading diagonal. We have some room on the downside to go. So 1.618 to the 1.764 extension are your standard targets for a diagonal. They don't typically extend as far as an impulse would. So this purple box between 306 and 283 is where I would expect this red pattern to take us in the coming days very soon. As I mentioned on Bitcoin, we've already hit our target, but there is room on the downside to go a bit lower. Same with Ethereum. Neither of them have broken actually Ethereum has broken the major support I had at 3,300. Bitcoin hasn't broken the 39.6 support that I had. So again, there is some downside potential for a lower low. After that, we would expect a pretty dramatic bounce back up. So imagine getting into the 300 zone and then bouncing back up to about 600 plus. You'd start getting really ecstatic. Hey, the rally's back. Let's start loading in. That's where we have to be very careful. We're going to keep track of the shape. If it is a clear three-wave shape upwards, very, very strong possibility that it's just a fake out bull trap. I would definitely shift to my red pattern as the alternate by that point. But right now, like I said, I'm sitting about 50-50, especially in Bitcoin Cash. The red pattern doesn't look as strong as it does in Bitcoin and Ethereum. So if we do have that happen, you get a chance to get out at that point. So you can get your strategy going right now. Start thinking of what you want to do. You want to sell or hodl it through the entire correction. If you do want to hold it through the correction, here's what we're looking at based on the extensions we have right now, standard extensions. If we have our third wave down of the larger wave C, would take us somewhere between $129 and $100. So assuming it's an impulse, if it's an ending diagonal, we may not have extensions as far down. Ultimately, after a bounce, we should get somewhere in the neighborhood of $86 to $67. So that would wipe out a lot of profits if we had that happen. As I keep mentioning, I'm not seeing this as the strongest possibly just based on this chart alone. However, because of Bitcoin and Ethereum looking really ominous right now, there's a lot of downside to go down for those. The higher you go, the lower you fall. There's a chance that the gravity from those two, the sentiment could actually pull down Bitcoin Cash, Ethereum, and EOS as well. Ethereum Classic and EOS as well. So keep on your toes for that. I would like to note that because we had a lower low, maybe we don't have as much bearishness trapped in. Maybe the sentiment's washed out. But until we can get more structure, this is what we have right now. I'll keep making updates. I'm going to be making more frequent videos on this, just highlighting how to strategize, how to get out. If we break any key levels, I'll also be rolling out some educational series. So don't forget to subscribe. And remember, the market does what the market wants, not what you want. So if the parameters change, if the data changes, you need to be ready to let go and accept what's coming, accept what is, not what you want to be. So until next time, thank you for watching and happy trading.